I think I found us a golden business to buy. It's based in Arizona, and it does specialized painting and sandblasting services to the Department of Transportation. It doesn't get more boring and cash flowing than that. I'm talking this business is generating $500,000 per year. That is right, simply from sandblasting and painting. And with the work that I just done and outlined in this video for you guys, we are going to figure out whether or not we should or should not buy this business. All right, let's rock. So story time. When I was at Blackstone and KKR, little baby Kenny Finance, before the long hair, we would have to take all of the deals and opportunities to something called investment committee. That is where we do a whole bunch of work, and then we show up to a meeting and we present our work to all the bosses and the partners, and they decide yes or no on an investment opportunity. And that's what we're gonna do in this video. We are going to do the smart money investment committee and try to figure out whether or not this business, this Arizona painting and sandblasting business, is worth our dollars and should we invest or not. So I'm gonna treat you guys just like I'll treat the rest of the pros. We're gonna dive into number one, the business opportunity. Then two, we're gonna touch on the financials and valuation. Three, we're gonna elaborate on what I think are some interesting growth opportunities for this particular business. And then four, I'm gonna give you guys my summarized key highlights for this business. And then lastly, this is one of the most important ones, I'm gonna touch on one of the key risks associated with buying and investing in this business and market overall. So those are the 5 key elements of our visual investment committee memo. And let's dive in with number one, the business overview. So what is sandblasting? So sandblasting is using abrasive materials and high pressure tools to remove old surfaces, coatings, rust, contaminants, etc. off of the surface before you apply a new layer paint. Plain and simple. It makes room for the new by removing the old. And you can do this on commercial, industrial, infrastructure-like applications for things like roads and bridges and buildings, etc. So very essential service, and it needs to be done for any type of new painting on something that is super important, very valuable. Plain and simple. And where's this company based? This company is based in Arizona. And what I learned, which was really cool, is that their largest customer is the Arizona Department of Transportation. So they are doing a lot of the work for painting and doing the sandblasting for Arizona roads, bridges, and other infrastructure projects that are from the Department of Transportation. That's a really good customer to have. One, because it's big, it's sticky, and it can be consistent, predictable revenue. All right, moving on to the numbers. Let's talk about financials. So let's check out the sheet here and see what kind of numbers they're working with. So this business is generating around $900,000 of revenue and has about cash flow each year of around $500,000. And for what we want to see is what is the cash flow margins? And to take that margins, you take the cash flow divided by the revenue, and that's your margin. So for this business takes $500,000 of cash flow divided by their $900 of revenue. They're having around a 56% gross margins. And that's a healthy amount of cash that we can then use to do 3 essential key things. Number one, we can reinvest into the business, meaning we can invest into marketing, we can invest into more equipment, etc., to do bigger and better jobs. Or number two, we can have more staff to do more jobs. Or number three, we can think about mergers and acquisitions, meaning that we are going to use $500,000 of cash flow to acquire maybe a smaller sandblasting and painting business and tuck that into our larger overall platform. So when you have a business that has a healthy cash flow margin, it gives you the opportunity for capital allocation to reinvest, to hire, or to buy other companies. And I love that. Now let's talk about valuation. So this business is asking about $1.1 million for a purchase price. And in private equity, we like to think about price of a business based on a multiple of a cash flow, because that allows for us to benchmark whether a price is over or undervalued based to peers in the marketplace. So for this business, they're asking $1.1 million. They're having a cash flow of $500,000. So you take $1.1 million divided by $500,000, and that will give you your multiple of what this business is asking. And for this, it's about a 2x multiple. And on average, small businesses are typically trading at a 3 to 5x multiple. So this one here is a discount. And one of the biggest things that you always want to think about as an investor is why is it selling at a discount? Or if it's a little bit higher, why is it selling at a premium? So towards the end of this video, I'm going to show you why they're probably selling at a discount. But it's good to know that we're going into this seeing a little bit of a discount. So let's keep going. Now, number 3, my value creation thesis. And for this, I like to put a hat on that's, if I ran this business right now, how would I build value in this business and grow it to increase more revenue and cash flow and profits for myself, my employees, my firm, etc.? How am I just going to take this thing to the moon? Okay, I think there's 3 key value creation levers here. Number 1, geographic diversification. So right now they're dominating Arizona, but that doesn't mean like neighboring states like Nevada, California could not use their services as well. So a very logical expansion is to see if you can acquire your way into a different market or do the grassroots efforts, do some marketing, build a track record in those new regions and start to develop a brand and presence in a different market, just like they did in Arizona. Number 2, diversified service lines. Given that they're doing primarily sandblasting and painting, there are a few other services they could additionally offer to customers to allow for them to unlock something that businesses love, which is upsell and cross-sell. Upsell meaning you're selling more of an existing product to an existing customer, or cross-sell meaning that you are selling to that customer multiple different product lines. So we want to try to see if we can get some cross-sell potential here. And the 2 logical cross-sell services are going to be corrosion protection services or industrial coatings to ensure that customers with their existing infrastructure in buildings can have their stuff last longer. That's a very logical cross-sell there. So if they want to sort of increase the useful life and age of their assets, they need you to have that product for coatings or protection. But then once it needs to be repainted, they got to have a sandblaster and they can use you as well. And once they want to actually paint, they can use you as well. So that's how we're cross-selling a bunch of different services to the exact same customer. I love that. And then number 3 is private sector penetration. So right now, their large customer, I think most of the revenue is coming from the Arizona Department of Transportation. And what you want to realize is it's not just transportation and municipal clients that need these kind of services. There are also private clients like commercial companies and buildings and real estate owners that need to get a lot of their existing buildings and assets sandblasted before they can apply new coats of paint as well. So we can sort of take our track record and our quality service and our talent that has specialized on the transportation services and apply that to private clients as well. So we just want to diversify as much as we can away from just one singular end market and tap into the large TAM of the commercial and private businesses that have assets and buildings and pieces of equipment and infrastructure that also need to get sandblasted before it's painted. It's free money, all right? Dive in. All right, we're making absolute moves and trying to understand whether or not this is a good or bad business. And if you are enjoying this, I highly consider you to subscribe to the channel where we do nothing but think about business acquisitions and smart money moves. And it is the best thing you can do for your journey and by joining this community. So make sure you hit the subscribe button down below. And now let's say like a midpoint check-in where we like to think about how are we feeling about this business overall. Based in Arizona, large customer, essential service, strong margins. Right now, I kind of like it. Before I'm fully committed, I want to think about what are some of the key questions I have. And when you're buying a business, what's really cool is oftentimes you have a chance to actually meet with the owner and kind of grill them on their business and their operations to truly confirm if you like this company or not. And while I was going through this, I kind of written down some of my key essential questions that I had if I were to have an hour with management. So check out my questions. Number 1, what are the trends in federal and state infrastructure spending? That's essential because if Arizona doesn't have the budget to invest into their roads and AKA sandblasting and painting services, then we're just not going to get paid at all. So we need to understand the origination of those dollars, AKA federal and state funding, and what are those trends, and if it's going to persist over the course of us owning this company. Because if there are trends to cut off funding, best believe this business, their revenue might be hit as well. And then number 2, I'm very curious about the contracts with the Arizona Department of Transportation. Like, how are these actually structured? Are these multi-year contracts? Are these one-off contracts? What I'm trying to get a sense of is every year, do they need to go present and convince the Arizona Department of Transportation to let them work with them? Or are these kind of baked for a long-term relationship? Those are like very essential things to ask and consider. And then number 3, who are they competing with, right? Like, I want to know, is this the only guy or gal in town? Are there larger or smaller players that can also do this service? Because how defensible is this moat, right? If I wanted to create a sandblasting and painting business tomorrow, can I buy a sandblasting piece of equipment? Can I hire 10 folks? And can we displace this company ASAP? So those are the 3 questions that I currently have that I'm noodling on and thinking, is this a good or bad business? But I'd love for you guys to also put in the comments down below what you guys think are essential questions that if you had 1 hour with management, you would really want to know to build conviction on whether or not you would want to buy this company or pass on the opportunity. So let us know down below what those comments are. There is no such thing as a dumb comment or a bad comment. Every comment is productive for the rest of the community because you putting something helps someone else think smarter and better as an investor. So let's support each other. All right, so we did the homework in understanding the business, understanding the growth opportunities, evaluating the financials and our valuation, and we prepped our diligence checklist and questions for if we had a chance to meet with management. Now let's try to summarize, like, what are our key highlights of things that we like about the opportunity overall? Meaning, if I were to go to IC today, I'm going to present this is why I like the business and why we should invest. Number one is there is a long operating history of quality service since the late 1980s. I love that. Warren Buffett says, try to invest in companies that have long operating histories of generating strong returns and good quality services and profits. And this business, at least I can see they're profitable today, they seem to have crushed it for the last 40 plus years. They've been around since the 1980s. They've had 100% customer satisfaction rate. And it seems to be that folks just love the work that their service professionals are providing. And that's a differentiated thing because you have now a brand and a reputation that you can leverage to sell and get new customers. It's really good. And then number two is they're a leader in a very niche market, right? The sandblasting market in Arizona is very, very small. And what I found out is that there's only one of two contractors that are doing this kind of service for the Arizona Department of Transportation. And they are on the preferred subcontractor list as well for some of these municipalities. And that is a really good thing because selling to these large municipalities, they have very long bureaucratic processes and it's very difficult for new entrants to sell and get contracts with these folks. So given they're only one of two contractors doing the sandblasting services for this very, very, very multi-billion-dollar client, this shows that there might be a lot of runway for more expansion and more growth and more opportunity just to double down within this existing customer. And then lastly, this is really cool, but I don't see any disruption risk here, mainly from AI. And this is, I know it's kind of like, why are we talking about AI in like a sandblasting business? It's important to know because if you look at other types of industries like tutoring or coding or marketing, those things are being disrupted by AI today. But I don't think you're going to see an AI robot doing sandblasting, industrial coding, corrosion protection, right, on different types of industrial and commercial and transportation assets. I just don't think it's capable of doing that right now. Maybe 50 years from now, but over the next 10 to 30, I don't think so. So I view this as disruption and AI resistant and a defensible in the market. So those are the three things that I like about this business. Now let's touch on what I think some of the key risks are for this opportunity. And it's so important to recognize not just the good, but the bad in a business as well. And if you're not taking the time to truly understand what are the key risks in an opportunity, you're kind of blind to what could go wrong in your investment. So what are those risks? Number one is there is significant customer concentration. Now, I haven't received the financials yet on this business, but I'm pretty sure if I look at the percent of revenue by customer, Arizona Department of Transportation probably represents 80% plus of revenue. Maybe even 100%, because that's all they talk about in their listing. Now, it is a large and stable and predictable customer, but life itself is just unpredictable. The Department of Transportation could, quite frankly, freeze and go on pause and say, we are not going to invest in any type of transportation projects for the next 2 years if something happens. And if that's the case, which is like a very low likelihood, but if that is the case, this business is done for, right? So in any business, it's not the best thing to have super significant customer concentration. Sometimes it's okay if the customer is predictable and strong and has strong tailwinds and strong budgets. But given that this is a type of business that receives their funding from federal and states, and we all know how politics are with funding, it's just that sometimes a very tricky dynamic to underwrite and predict, okay, everything that I've been earning from this customer last year is going to be here this year and the year after that. It's tough to predict that, especially with a volatile end market like politics and government municipal funding. Then the second one, which is labor issues. So from the listing, we learned that there was only 3 employees, including the owner. So number one, there's just instantly significant owner reliance on the business, right? The owner is customer relationships, working on projects, etc. So if you lose one customer, a third of our workforce is gone. And if 1 or 2 of the other ones leave, we are kind of screwed if we cannot find replacements ASAP. So I think there's just embedded structural supply of labor issues that we need to look into this business. The first thing I would do once I acquired this business was to try to find and build a consistent supply of labor to work on some of these projects, whether that be having an apprenticeship program or going to trade schools and community colleges and starting to recruit from there or poaching from competitors, whatever I need to do to ensure that whenever I have a job, I always have existing labor plus more if needed. And then the last one, and it's funny enough, I get a lot of comments on YouTube about this, but this business requires a license. And what I want you guys to understand is my position as a private equity holding company investor is I'm not trying to buy these amazing cash flowing trade style essential businesses to be a essential trade style essential worker. I am doing this as an investor and a capital allocator, right? I find the business that has growth prospects, that has needs for capital allocation decisions, strategic growth, leadership decisions, and tuck-in acquisitions. That's my expertise. But the actual day-to-day trades, Kenny Finance isn't doing that. Someone else is. And the way how I go about that is I buy a business that has an existing leadership team in place, meaning that there is already a COO, there is already a general manager that has a license, that knows the day-to-day, that knows the employees, that knows our customers, and I come in and help scale and grow that business. I'm not working on the projects. Instead, I'm working on the vision and the execution and the scaling of the company. So that's two different jobs. And I doubt someone that's doing sandblasting wants to sit in Excel and think about how to model out cash flows and waterfalls and mergers and acquisitions and synergies and stuff, right? So I'll let them do their job and they let me do my job. And the world's great. But in this business, you'd have to have a specialized license to own this type of company. And what private equity owners typically do is they invest in the company and they allow for the existing COO or president or general manager to roll over a piece of the equity into the ownership so that the new ownership of the business includes me, majority, plus an employee with that license. And if one of the employees, which is only 3 folks, doesn't have a license, we're kind of screwed. Meaning I have to find and poach someone else or go and get the license myself, which I don't want to go to school and learn how to do a sandblasting trade. So that's a really key risk. Now let's bring all of this together and try to figure out, would we buy this business? Like I said, they are selling for $1.1 million, which is a 2x multiple, which is undervalued, given that they're doing $500,000 in cash flow. And remember, earlier in the video, I told you, why are they selling at a discount? And we found out why they're selling out of business, by the way. Number one, they have significant customer concentration with the Arizona Department of Transportation. Number two, there's also significant owner reliance, meaning that the owner does a lot of the sales, a lot of the execution, and the actual sandblasting and painting. So it makes it very difficult for a new owner that wants to be hands-off to run this business. But hey, then again, they are generating significant cash flow, $500,000 plus, that we can use to reinvest into the business, into marketing and scaling and diversifying our service offerings and geographic coverage. We can also hire more talent, or we can tuck in other businesses. So there's platform potential to scale and grow this business, but there's just structural things in place with the customer concentration, as well as the owner reliance and difficult labor issues that make it really tough on day one to run this business. So are we going to buy this business? Let me know down in the comments down below what you guys think. Give me a very simple yes or no. And if you want to, tell me why. But I'd love to get your thoughts on if you're going to buy this business. But to have my thoughts, the business is great. The end market is cool. But labor is a very difficult thing to change. Like, not having an incredible bench of talent and leadership is really difficult. And also, politics and single municipal customer concentration is a very tough thing to bet on and underwrite for the future growth of a company. And with those two things in mind, I'm going to pass. So I'm unfortunately going to pass on this opportunity. If you guys are interested, the link is available down below somewhere. You can check this out, connect with the bankers. And that's why I love investing, ladies and gentlemen, is that you can spend weeks and months learning about a business, doing a lot of homework, meeting a lot of people, and trying to build a conviction and an opportunity, and still eventually passing. Now look, that is not wasted time. That is not dead weight. Instead, you have sharpened your toolkit as an investor to think more critically about a business, about opportunities, and now for the next opportunity, you can strike like a snake. I don't know if a snake's the right analogy, but you get the point. So we're passing on this one. But guess what? I'm not leaving you empty-handed. If you want to check out 10 other super boring cash run businesses that are still around that you can purchase today and connect with the bankers, check out this next video where I outline my 10 favorite boring businesses that are existing and around today you can go out and buy. And I'll catch you guys on that next one. And look, if you enjoyed this video, do yourself a really big favor. And first and foremost, let me know if you're going to buy this company or not. And then 2, like the video. It means the world to me as well as the rest of the community. And I'll catch you guys on the next one. Peace.